All right, let's talk about NVIDIA. I mean, this stock has been on an absolute tear, but the real question is, how healthy is it really? So today we're going to pop the hood, give it a full technical checkup, and see what's actually going on. And that brings us to the question that's on pretty much everyone's mind, right? Is NVIDIA still a rocket ship with plenty of fuel left in the tank? Or is it starting to look more like a risky bet way up here? Well, that's exactly what our diagnostic is all about. And just to give you some context for how wild this is, the stock is trading at over 92% of its 52-week high. I mean, that is really close to its peak performance for the entire year. It's a massive run-up, and that's the backdrop for everything we're about to dig into. So, to try and figure out what could happen next, we're going to treat this just like a doctor would. It's a full diagnostic. We'll start by checking the vitals, then we'll listen to the heartbeat, maybe even take an X-ray to see what's hidden, and only then, with all that evidence, can we give a final prognosis. Okay, first things first, the vitals. Think of this like when you first walk into the doctor's office. We're just getting a quick, high-level look at the overall health to see what we're working with. So what are these vitals telling us? Well, it's a bit of a mixed bag, but mostly healthy. The overall technical score is, moderate. It's solid, but not perfect. And its beta is low, which just means it's not as jumpy as the rest of the market. But see that risk/reward number? That's kind of flashing a yellow light. It's basically telling us that the potential upside from here might not be worth the potential downside. So yeah, a healthy patient for sure, but there are definitely a couple of things that make you go, let's look a little closer. Okay, so let's move on from the vitals and check the heartbeat. This is really about the engine of the stock, right? We're talking about its upward momentum. Is that pulse strong and steady? Let's find out. And to check that pulse, we use something called moving averages. It sounds complicated, but it's not. Just think of it like this. If the average price over a short period, say the last 5 days, is higher than the average over a longer period, like the last 20 days, well, that means things are speeding up, right? The trend is getting stronger. It's a classic sign of a really healthy upward push. And here's the data for NVIDIA. Now, this is what's so cool. Look at how perfectly these numbers are stacked. The 5-day average is at the top, above the 10-day, which is about the 20-day. I mean, this is what traders call a bullish alignment, and it's literally the textbook definition of a strong, healthy uptrend. The heartbeat here, it is looking very strong. And it's not just the moving averages either. Other key pulse checkers are all flashing green. You've got the MACD, which measures the trend's strength. It's strongly positive. Then there's the RSI, the Relative Strength Index. It's showing that even though the stock is strong, it's not in that overbought danger zone yet. So what does that mean? It suggests that even after this huge run, there might still be some fuel left in the tank. So, okay, so far, so good, right? Everything looks great on the surface. But a really thorough diagnostic doesn't stop there. It's time to get out the X-ray machine and see if there's anything lurking underneath. And, well, this is where things get interesting, because we find a subtle but really important warning sign. And this really lays out the issue perfectly. On one side, you have the price story. Everything's great, price is near the highs, strong upward momentum. But then you look at the volume story. That's how many shares are being traded, and it's telling a totally different tale. It's hinting that the buying pressure might be drying up, that maybe, just maybe, some people are quietly selling into this strength. When the price is going up but the volume behind it is weak, that's a red flag. We call it a divergence. And this number, this is the shadow we saw on the X-ray. It's a reading from a fancy-sounding indicator, the Accumulation/Distribution Oscillator. But all you need to know is that a negative number here suggests that selling, or distribution, is happening kind of secretly, under the surface, even while the price itself looks fantastic. This is a warning flag. You can't ignore it. Okay, so now we have this warning in the back of our minds. With that, let's map out the immediate challenges. Let's look at the battlefield, the gauntlet that the stock has to run through right now. And on any battlefield, you have key terrain, right? For stocks, that's support and resistance. The easiest way to think of it is this. Support is the floor, a price level where buyers usually step in and hold it up. And resistance, that's the ceiling that the price has a really hard time breaking through. So for NVIDIA, right now, the floor, that key support level is right around $200.38. This is the line in the sand. Buyers absolutely have to defend this spot to keep the good times rolling. If this floor breaks, that's a big sign of weakness. And then, if we look up, The ceiling is at 206.28. This is the first major wall the stock has to smash through to prove it's still got the muscle to keep climbing back toward those all-time highs. All right, we've checked the vitals, we've listened to that strong heartbeat, we've even analyzed the X-ray and found that little shadow. So now, it's time for the prognosis. Based on everything we've seen, here are the 3 most likely ways this could play out. We're going to walk through the bullish case, the bearish case, and the wait-and-see neutral case. And it all comes down to how the stock behaves around that floor and ceiling we just talked about. First, the bullish scenario. This one's pretty simple. The stock takes all that momentum we saw and just punches right through that 206.28 ceiling. And ideally, you'd see a big surge in volume confirming the move. If that happens, well, the path looks pretty clear for it to go and challenge that 52-week high again. Now for the bearish scenario. In this version of the story, that ceiling at 206.28 is just too strong. The stock tries, fails, and then loses its nerve. It falls and crashes right through the floor at 200.38. If that happens, it basically confirms that shadow on our X-ray was a real problem, and the next stop could be all the way down around the 188 mark. And finally, there's the neutral scenario. You can think of this as the stock just getting stuck in limbo. It's just trapped. It bounces back and forth between the floor and the ceiling. Not strong enough to break out, but not weak enough to break down either. It's basically the market taking a breather, digesting all the recent action and just waiting for a clearer signal one way or the other. So, we've gone through the entire diagnostic. What's the one big takeaway here? What does this all mean for you? Let's boil it all down. It really comes down to this. The diagnosis shows a stock that is, on the surface, incredibly healthy. It has a powerful heartbeat, tons of momentum. But that X-ray revealed a little hairline fracture under the surface, a warning sign in the volume that tells us to be cautious. The bottom line? The uptrend is strong, but it's not invincible. And so that leaves us with a big question, right? What we're seeing is a classic battle. Powerful upward momentum on one side, and this quiet, cautious volume on the other. So, as you watch this play out, which signal will you be paying attention to? Because the one that wins this fight is going to decide where NVIDIA heads next.